Furthermore, they now seek price control. Shanghai, not London or New York, is where they would like the pricing to take place. Therefore, that is a radical shift in my opinion. I believe this is a contributing factor to the recent price increases in gold and silver. As for relinquishing control of capital, I don't see it happening. I just don't see that. Based on my understanding, its initial purpose will be to examine commerce, if you will. And thus, the plan will be executed. Furthermore, the yuan to gold exchange rate is completely variable right now. That might be addressed at a later time, if that seems more comfortable for you. Having an SGE controlled fault, for example in Saudi Arabia, seems to be the current plan of action. You could say it's a central bank in China, the People's Bank of China, that controls and owns 100% of the Shanghai Gold Exchange. Thus, it is clear that the government has a hand in this. A government agency runs the stock exchange. Contrary to what one might expect in Europe, this is not a private company. Money can be sent and received in yuan for the purchase and sale of gold. Other forms of payment will not be utilized. Alright, so I wouldn't necessarily try another one if you wanted to strike a deal with Saudi Arabia, for example, to buy oil. If you want to pay with gold, the Saudis might be fine with it. In that case, it goes into their vault, and they'll eventually have Chinese yuan or something to trade for it. Therefore, China will not be the only country to benefit from this. I have faith that other countries can handle it. Only Chinese yuan and no other currency will be accepted as payment for gold entering and leaving the vaults. In my opinion, that is correct. However, it is certain that everything will become clearer in due course. Considering this from the perspective of the Chinese government, I would state that you are examining the currency used for global settlement. The dollar is about to die a horrible death. How much time it will take is unknown to us. A year, a month, or even 10 years could pass. The dollar's collapse, however, has been going on at a rapid pace since Trump's election. A new era, free of fiat currency, is dawning. China will need to take precautions against a dollar collapse at some point. Because the dollar is the supreme fiat currency, the yuan will collapse along with it unless she subjects it to a gold standard. All fiat currencies will collapse together with the dollar. Actually, that's all there is to it. Why? Because contrary to what monetarists would have you believe, currency prices are not solely dependent on quantity, but also on the growth or shrinkage of amount, figures pertaining to the money supply, and everything else imaginable. What matters even more is the confidence that your debtors in that currency have in it. Since all currencies are pegged to the dollar, its depreciation will have a ripple effect on all of them. They may not be directly connected, but they are certainly tied to the dollar. If you will, the dollar has superseded gold as the standard for global currency. The dollar is the only fiat currency that will be decimated. Thus, from China's perspective, it may be necessary to create a contingency plan where they may fix the yuan to gold in order to survive after the dollar. Along these lines, I believe what they have accomplished by swiftly agreeing to open SGE vaults overseas and to permit foreigners to begin direct participation in futures. Moreover, it is more than just gold. Additionally, it includes every metal listed on the futures market. In essence, they have taken a massive measure to safeguard themselves in the case that the dollar does indeed turn turtle and fall to zero. Yes, I do not perceive it. When linked to the US dollar through a currency board system, the Hong Kong dollar functions and has functioned admirably. It has been a tremendous success. I don't mind. On the other hand, if the US dollar were to disappear, the HK dollar would need to locate a new currency board link. Not to mention that I believe it will likely be worth a lot of gold. It seems like there's no other way. A fresh approach is required, in my opinion. There will be a massive shift in China's operations, and I believe it is an excellent point. Currently, I believe we are considering the possibility that the dollar could actually depreciate to zero. Our only defense against that is to maintain tight control over the gold. That is expressed in most basic terms. For the time being, that is the extent of the considerations. When it comes to comprehending money, credit, and all that jazz, I believe the Chinese have some really brilliant brains on their hands. After all, they do know that gold is money and that everything else is just hot air. Also, I believe they get that the Industrial Revolution, which they're attempting to control or profit from, is actually just a modernized version of the one that Britain experienced in the 2 centuries leading up to the 1900s, and especially considering that the gold standard was in effect from 1822 until the end of the war in 1914. I mean, the success of the Industrial Revolution in our country was built on the stability of currency value that gold provided. By the time of World War I, this nation had produced 80% of the world's ships. When I say this nation, the United Kingdom is what I mean. I would guess that there were around 25 million people living there at that time, which is rather big for a nation. Prior to the First World War, we had virtual control over the entire planet. And it's true, London was the global financial hub. Therein lay the strength of good currency. Yeah, it was, Furthermore, I believe the Chinese are charming enough to know that when the tide turns, they will no longer be able to prop up companies by increasing their debts, creating money as needed, and so on. I mean, they've figured out debt to a certain degree. And it's especially true considering the troubled histories of the regional governments. They have picked up a lot of useful information, but in the end, it all comes down to playing the dollar game. Additionally, I believe they will adopt a new strategy after the currency depreciates. Plus, I predict that they'll engage in the gold game. The Politburo of the Chinese Communist Party appointed the People's Bank of China to oversee the country's gold and silver reserves, acquisitions, and everything else in the 1980s. So you're absolutely correct that that's when the regulations were drafted. Keep in mind that in 1983, the generally held belief, and this would have been the case in China as well, was that you needed to hold on to at least 10%, possibly 15%, or even 20% of your assets. Now consider the situation from the perspective of gold reserves or something like. From 1983 to 2002, there was a bear market in gold lasting around 17 to 19 years. Now, this was actually a great chance for the People's Bank of China, which was in charge of all of China's foreign reserve operations, to convert part of its building foreign reserve into gold. After doing the math at today's pricing, it was plausible that the public would have been able to buy gold for the first time in 2002 when the Shanghai Gold Exchange debuted. I would estimate that they amassed almost 20,000 tons of gold during that entire period. China has been the world's leading gold miner for a long time, and it continues to remain so even though production is presently dropping. This is partially due to their encouragement of mining, so they will have accumulated a lot more since then. Nor have they stopped importing doré from other countries, especially those like Mongolia and others. And absolutely no gold is exported from China. It's like the Hotel California, but with gold instead of cash. In addition, as you mentioned earlier in the conversation, there has been a gold torrent, if you will, that has been flowing eastward from the west. And it has done so for an infinite number of years. Now, I believe that this is all based on a Marxist economic theory that capitalism ultimately destroys itself. The destruction of credit's value in a capitalist system is a prime example of this. Thus, it is what they perceive now, whether correctly or incorrectly. To begin with, I believe it was their driving force behind amassing gold. From China's perspective, it has become an enormous problem that they must prevent from undermining their authority. I think it's fair to say that the election of Donald Trump was bad news for the world economy at the time, what with all the tariff policies and whatever. Afterwards, on Liberation Day, the very first event was an announcement from a Chinese Commerce Office or something, stating that the country was intensifying its negotiations with Japan and Korea to establish a free trade area. The next week, President Xi traveled to many ASEAN countries for official visits. What we're referring to here are the member states of an East Asian free trade area, or trading bloc, if you will. We are considering Myanmar to be one of those countries. The list goes on and on: Cambodia, Vietnam, Thailand, Malaysia, Indonesia, and so on. Thus, you have all 10 of them, essentially. Obviously, trade was what was being addressed when such expressions were used. Now that President Trump has presented us with a shared problem, how will we address it? We really need to collaborate on this. It seems self-evident, I suppose. An announcement that followed from the Shanghai Gold Exchange, or the People's Bank, as it is still known, announced plans to open Shanghai Gold Exchange vaults outside of China for the first time, but this was less apparent at the time. We have now learned that they have plans to open a vault in Saudi Arabia and are in the process of doing the same in Hong Kong. How come Saudi Arabia? Sure, it's not an ASEAN member, but that's where the oil is. I also believe that the Saudis, if you will, would greatly benefit from having a currency that maintains its worth. When they finally give in, like the Chinese have, and we start talking about the factors that back dollar credit, it will essentially weaken the currency. Not even the Saudis sell any oil to the United States. Number. Everyone wants in on this, even the Saudis. And I have a feeling you'll end up with the other one. Thailand seems like a good bet to me. On the other hand, the Shanghai Futures Exchange announced its intention to welcome foreign traders a little over a week ago. As things stand, banks can trade on the Shanghai Futures Exchange, but they will need to establish a Chinese firm to facilitate these transactions. The new thing is that anyone, including banks based in other countries, can join the exchange and start trading there right away. There are two factors that contribute to this. The yuan is becoming internationalized for one thing. Thus, it will be the common settlement currency of the BRICS and the Shanghai Cooperation Organization. So that's the strategy. The dollar will so be superseded by it. So that's the starting point. Additionally, and this is closely related, the fact that up until recently, the London gold market and the New York COMEX were the exclusive arbiters of gold prices. Everything is shifting. By a wide margin, the Chinese are the dominant force in the physical market. Furthermore, they now seek price control. Shanghai, not London or New York, is where they would like the pricing to take place. Therefore, I consider that to be a monumental shift. I believe this is a contributing factor to the recent price increases in gold and silver. It was transcribed by turboscribe.ai. To get rid of this message, go for unlimited.